Welcome to Team Junior. Goods and Services Tax, GST. What is GST in simple words? First of all, Goods and Services Tax, GST, is a single tax system. The imposition of this tax takes place jointly by the center and the state. Furthermore, the imposition happens with the recommendation of a federal council. In GST, the goods and services are divided into 5 different tax slabs. This is for the purpose of the tax collection. Above all, the tax slabs are 0%, 5%, 12%, 18% and 28%. Also, petroleum products, alcoholic drinks, and electricity do not come under GST. Rough precious and semi-precious stones carry a special rate of 0.25%. Gold also carries a special rate of 3%. GST certainly subsumed several taxes and levies. These include central excise duty, services tax, and additional customs duty. Furthermore, state-level VAT, surcharges, and octroi also come under GST. The GST regime has done away with levies. Also, these levies were applicable to interstate transportation of goods. Most noteworthy, the application of GST is on all transactions. These transactions are sale, purchase, transfer, lease, and import. Formula to calculate GST according to class 8 is equals SP plus GST percent of SP. Who introduced GST in India? Prime Minister Narendra Modi launched GST into operation on the midnight of the 1st of July 2017. But GST was almost 2 decades in the making since the concept was first proposed under the Atal Bihari Vajpayee government. The development of GST took many consultations, negotiations and revisions before it was launched in its final form in 2017. The launch of GST was also made difficult by the fact that it required a constitutional amendment, and hence, a 2/3 majority approval in the parliament, and a nod of more than at least half of the states. What are the different types of GST? Central GST, CGST, Central Goods and Service Tax is the share of GST tax diverted to Revenue Department of Central Government and is also equivalent to SGST. This share of tax compensates the loss of existing excise duty and service tax to the central government. In the case of local sales, balance 50% quantum of GST is transferred to CGST. State GST, SGST, State Goods and Service Tax is the part of tax diverted to the state government which is credited to Revenue Department of State Government. This is generally equivalent to CGST. This compensates the loss of existing VAT or sales tax revenue to state government. In the case of local sales, 50% quantum of tax amount under GST is diverted to SGST tax. IGST, Integrated Goods and Services Tax is levied when interstate sales and purchase is made. One part of this tax transferred to central government and another to state government to whom goods and services belong. The IGST is charged only in case of interstate sales or when transactions between two states involved. Union Territory GST, UGST, When a transaction takes place within a union territory, UT, without a legislature, the part of GST that the UT gets is called UGST. Why GST is important in India? The current structure of taxes in India is a rat trap. The wide powers to levy and collect taxes provided to states and central government. As a result, both levy different kinds of taxes, which makes the Indian tax structure very much complex and a complex economy too. The small-scale industries in India continuously suffering from these problems. Tax rates under GST. GST rates are divided into 5 categories, which are 0%, 5%, 12%, 18%, 28%. All the basic need requirement goods are placed in 0% category, like food grains, bread, salt, books etc. Goods like paneer, packed food, tea, coffee etc. are placed under 5% category. Mobiles, sweets, medicine are under 12%. All types of services are under 18% category. All other remaining luxury items are placed under the last head of 28%. Petrol, gas, crude oil, diesel etc. are still out from the criteria of GST. There are 2 types of taxes. Direct tax means the taxes which are paid directly by the person on whom it imposed. For example, income tax, property tax, wealth tax, gift tax. Indirect tax means the tax whose burden can be transferred to others. For example, sales tax, excise duty, service tax etc. Advantages of GST. For the government, create a unified common market will help to create a unified common national market for India. It will also give a boost to foreign investment and Make in India campaign. Streamline taxation through harmonization of laws, procedures and rates of tax between center and states and across states. Increased tax compliance, improved environment for compliance as all returns are to be filed online, input credits to be verified online, encouraging more paper trail of transactions at each level of supply chain, discourage tax evasion. Uniform SGST and IGST rates will reduce the incentive for evasion by eliminating rate arbitrage between neighboring states and that between inter- and interstate sales. For overall economy, bring about certainty, common procedures for registration of taxpayers, refund of taxes, uniform formats of tax return, common tax base, common system of classification of goods and services will lend greater certainty to taxation system, reduce corruption. Greater use of IT will reduce human interface between the taxpayer and the tax administration, which will go a long way in reducing corruption. Boost secondary sector, it will boost export and manufacturing activity, generate more employment and thus increase GDP with gainful employment leading to substantive economic growth. Ultimately, it will help in poverty eradication by generating more employment and more financial resources. For the states' expansion of the tax base, as states will be able to tax the entire supply chain from manufacturing to retail. More economical empowerment, power to tax services, which was hitherto with the central government only, will boost revenue and give states access to the fastest growing sector of the economy. Enhancing investments, GST being destination-based consumption tax will favor consuming states. Improve the overall investment climate in the country, which will naturally benefit the development in the states. Increase compliance, largely uniform as GST and IGST rates will reduce the incentive for evasion by eliminating rate arbitrage between neighboring states and that between inter and interstate. Impact of GST. In the case of indirect taxes, the burden was on end customer or consumer. But due to the implementation of one tax in the whole country, the overall cost of production of all goods will be reduced. But on the other hand, in case of services, it will increase after the implantation of GST, but CST gets abolished, which ultimately reduces the cost of goods. Currently, we pay 30-35% tax on a commodity. In the case of some goods, direct and indirect taxes imposed by government raise its cost up to 30%. After the implementation of GST, it will reduce. The GST also reduces the cascading effect of tax, which helps in making the trade simple and reduces the tax burden of entrepreneurs. Conclusion. Thus, GST is a positive step towards shifting Indian economy from the informal to formal economy. It is important to utilize experiences from global economies that have implemented GST before us, to overcome the impending challenges. Thank you for watching this video. Please like it, subscribe it, share it, and don't forget to hit the bell icon.